Today in crypto. Satoshi Nakamoto, the unknown Bitcoin creator, released the first client network on this day 12 years ago, officially kickstarting what is perhaps the greatest monetary revolution of the 21st century. 6 days prior, on January 3, 2009, Satoshi mined the Genesis block, known as number 0, coding it into the software. Unlike the subsequent blocks in the chain, the Coinbase reward from the Genesis block cannot be spent, as only publicly mined coins can be transferred. So, the first block, or number 1, was mined on January 9, putting a true start to the network as it is known today. Continue reading on Coin Telegraph. As the price of gold plunged on Friday, CNBC's Jim Cramer said the rise of crypto may partly explain the sudden disinterest in the precious metal, a potential sign that the mainstream has flipped the script on Bitcoin, BTC, and digital assets. When asked why gold isn't rallying amid the political chaos on Capitol Hill this week, Cramer said the market is either not as chaotic as it seems or that all of the money is going into cryptocurrency. Continue reading on Coin Telegraph. As the price of gold plunged on Friday, CNBC's Jim Cramer said the rise of crypto may partly explain the sudden disinterest in the precious metal, a potential sign that the mainstream has flipped the script on Bitcoin, BTC, and digital assets. When asked why gold isn't rallying amid the political chaos on Capitol Hill this week, Cramer said the market is either not as chaotic as it seems or that all of the money is going into cryptocurrency. Continue reading on Coin Telegraph. Warp Finance, a DeFi lending protocol that suffered an $8 million flash loan exploit shortly after release, is now gearing up for a relaunch that will include an integration with oracles by Chainlink. The inclusion of Chainlink oracles reportedly serves as protection against similar exploits. Flash loan exploits use a feature that allows borrowing an unlimited amount of funds, as long as it is also returned within the same Ethereum block. According to the team, security experts determined that the root cause of the exploit was an exploitable price oracle. Continue reading on Coin Telegraph. Gold's prospects seem to dim as Bitcoin's glitter. According to multiple experts, one possible reason for Bitcoin's remarkable recent price rise are massive investor outflows from another popular inflation hedge, gold. Spot gold swooned over the past week, falling 62% to $1,857. The asset previously had been surging in unison with Bitcoin, which is up over 40% from $28,000 lows last week. In a tweet on Friday, Charlie Morris, founder and CIO at ByteTree Asset Management, said that the pullback in gold might be attributable to investors moving to Bitcoin. With bond yields up and inflation expectations down today, #gold has taken a hit. This justifies a $50 sell-off, but price is down $120. I'd attribute the excess to flows moving towards #Bitcoinpick.twitter.com/QSWBB8NAXA. Likewise, earlier in the week, CNBC's Mad Money host Jim Cramer said that the outflows from gold ETFs are all going to crypto. Tracking inflows and outflows from Grayscale's Bitcoin Investment Trust and gold ETFs back this assertion, as Grayscale has eclipsed gold. Bitcoin's competition with gold has already started, as evidenced by more than $3 billion of inflows into Grayscale Bitcoin Trust and greater than $7 billion of outflows from gold ETFs since October. JPM says, competition with gold as alternative currency will continue given millennials will become over time more important. Pick.twitter.com/LKSM94. The moves could be a sign of Bitcoin's rising status as a legitimate asset class. Gold and Bitcoin have long been linked, as both are seen as a way to protect wealth against inflation and macroeconomic uncertainty. But if the price movements over the last week are any indication, however, Bitcoin may be winning the narrative race. In an interview with Bloomberg, CoinShares Chief Revenue Officer Frank Spiteri said that the narrative surrounding Bitcoin as an inflation hedge is gaining legs in the face of a highly unconventional monetary policy environment. It seems like we're in the middle of a simultaneous awakening among institutions to Bitcoin as an uncorrelated store of value assets. he said. The observations from experts come after a unique flippening earlier this week. As of Friday, a single Bitcoin is worth more than a 20-ounce gold bar. Still, for all the bearish price action and Bitcoin's ascendancy, certain high-profile gold bugs refuse to budge on their positions. In a tweet yesterday, longtime Bitcoin skeptic and gold investor Peter Schiff claimed that once investors understand the inflation risk, they'll return to bullion. Today's weak economic data on jobs is causing investors to buy risk assets and sell safe havens like #gold. The weaker the economy gets, the more money the Fed prints to prop it up. So, the real risk is #inflation, and once investors understand this, they will seek safety in gold. Hit the like button and subscribe to the channel.